Good evening. Thanks for joining us. This is NTD Business, and I'm Paul Graney. Gamestop shares continue to climb. Now the White House says it's looking into the trade that almost bankrupted a hedge fund. President Biden pauses new oil and gas leases and cuts fossil fuel subsidies. It's part of his focus on climate change, but many worry how it'll affect jobs. And British lawmakers summon the CEO of the country's largest bank. They want to know if it's helping the Chinese regime erode democracy in Hong Kong. Shares of Gamestop more than doubled on Wednesday. Earlier in the week, the rise almost bankrupted hedge funds that bet against it or shorted it. And today, more funds took heavy losses, with some analysts saying it could have been a professional institutional investor that spotted the short opportunity, pushed up the price with targeted purchases, and capitalized on the price going up. But it was stay-at-home retail investors that grabbed the headlines as they piled into the stocks and cleaned out the hedge funds. Now the SEC and even the White House say they're looking into the trade. Here's the details.
GameStop is in the middle of an epic Wall Street tug-of-war. On one side, professional traders known as short sellers who are betting shares of GameStop will fall. On the other, amateur investors who are betting shares of the gaming retailer will continue to scale unbelievable heights. And so far, the amateurs are wiping the floor with the professionals. Shares of GameStop doubled again on Wednesday, catapulting the stock price by 800% over the past 2 weeks. The stock has been on a tear. Short sellers, traders who make their money by betting a stock will fall, saw the stock going up and expressed their disbelief. Last week, Citron Research uploaded a video alleging GameStop is a, quote, failing mall-based retailer, and tweeted the stock would nosedive back to $20. Amateur investors who disagree flocked to social media sites like a Reddit message board to defend the stock, amassing a horde of supporters who pushed the stock of the dot-com frenzy of the 1990s, with social media providing a new twist.
There are these groups, right, on Reddit. One is one group that, starts to talk about certain stocks. So people are in these trading groups or these communities pushing these certain stocks, right? And then you have Robinhood, which is where you can, a brokerage where you can buy fractional ownership where you couldn't do this. So now you have just a bunch of money flowing in to these different stocks because these communities, they're saying they're really good buys, and it's really just money pushing in.
Even Tesla CEO Elon Musk, who's had his own bitter battles with short sellers, weighed in, seemingly on the side of the amateurs. After Tuesday's market close, he tweeted out a link to the Reddit message board that's hyping the GameStop stock. The controversy doesn't appear to be letting up. GameStop shares touched $350 a share on Wednesday. Some of the professional investors who bet on the stock's demise have thrown in the towel. Citron Research, the firm that said GameStop was going to $20, said Wednesday it closed out the majority of its losing bet the day before.
And reporters even asked the Federal Reserve Chairman Jerome Powell about GameStop and its potential impact on financial stability. He said he would leave it up to others to handle. Those others could be the SEC or even the White House. You'd think one stock, what's the big deal? But many analysts are worried. I talked to Danielle DiMartino Booth about it. She spent 9 years at the Federal Reserve Bank of Dallas. Now she's the CEO of Quill Intelligence. Asked her why the GameStop saga is so significant.
The whole cottage industry, Dave Portnoy, the idea of the Robinhood traders, all of this was founded on the foundation of all of this was don't fight the Fed. That the Fed is going to keep the easy money flowing into the stock market, that there's no way that stocks can ever go down. And this fairly simple premise is what has inspired millions of people to open up accounts and trade on options, which are obviously a lot less expensive to trade than actual underlying stocks. And the problem that we're seeing creeping up is that this flash mob, if you will, because they're moving in such massive numbers into stocks that have been shorted. In other words, people have sold them in order to profit when they decline because they don't have any profit prospects. But when you crowd into a stock like that is already short, if you're short the stock, you have to buy it back in order to close out your trade and to cut off your potential losses. That's happened to such an extent that these day traders who are on these open forums have put 2 major hedge funds out of business just in the past few days. These are hedge funds that public pensions own. You're starting to talk about retirees being put at risk here, and that is why the White House, the Treasury Secretary Yellen, that is why we've seen headlines coming out of these major entities today saying, we're looking into this.
And I have heard people calling for regulation, but then in the next sentence they say, I'm not sure how you could actually regulate this. Is it the case?
Well, it is, but back in 1996, and actually later on in the press conference, Chair Powell was asked this question directly. Is the Fed considering raising margin requirements? Because right now we've got margin debt at an all-time high, even higher than it was in 1999-2000 during that crazy frenetic time in stock market trading. And he answered the question flat out, no, the Fed is not considering margin requirements at this time. But had you asked him last week at this time if this would even be in the realm of possibilities for questions he would be being asked when he was at the podium, he would have said no. That is how quickly this situation has become very problematic, again, for regulators, for the Federal Reserve.
But near the beginning of the questions and answers segment, somebody asked Chairman Powell, are you going to do anything about rising asset prices? And Powell said something to the extent was, well, I don't really think, low interest rates and asset prices, they're not quite as tight as people think. Were you surprised by his answer?
Well, it certainly seems like he's out of touch at best. And by the same token, he really is in a trap. If he was to even suggest that the $120 billion per month that the Federal Reserve is purchasing is causing financial instability, if he was even to suggest that the Fed was going to thinking about tapering its purchases, he would set off a true decline in markets and a market correction, and that would open up a whole different set of problems for him. Again, these are circumstances that Fed policy has created for itself. As one of my favorite market veterans has always said, Jim Grant, the Fed is both arsonist and firefighter.
Mr. Powell, Chairman Powell, they aren't, in a certain sense, able to raise interest rates at the moment, even if they wanted to, right?
No, they really are not. The Federal Reserve solution to an over-indebted corporate bond market that was upset clearly by the black swan of the coronavirus, the solution was to encourage another $3 trillion of debt being taken on by corporate America. So there is so much leverage in the system right now, again, that the Fed would create other types of problems because so many of these bonds have to be refinanced in 2021. There is an overabundance of commercial real estate that also is relying on interest rates being at that zero bound in order to be refinanced. So again, problems of the Fed's making, but massive problems in terms of scope. We're talking about trillions of dollars here that would make the subprime mortgage crisis look like child's play.
Just incredible. Really just incredible. Ms. Booth, really appreciate it. Thank you so much.
Absolutely. Thank you.
And investors could be worried. Today, markets posted their biggest drop since October. The Dow fell 634 points, or 2.05%. S&P 500 lost 99 points, about 2.5%. The Nasdaq dropped over 355 points, 2.61%. The declines pushed the S&P into negative territory for the year so far. CBOE Volatility Index closed at its highest in nearly 3 months. Some company news: Boeing was among the top drags in the Dow, falling nearly 4%. Facebook edged up while Tesla fell 2%. They reported their earnings results. Apple also dipped in extended trading. We have full analysis on company results near the end of the week. And do you feel burned out from working at home? Some Wall Street CEOs say remote working can't be the long-term solution, and they want to have more people back at the office.
2 bank executives say working from home is becoming less effective, despite having been successful for the first year. They gave the comments on Tuesday at a virtual meeting of the World Economic Forum.
So my bet is we'll have more people coming back to work You'll have flexibility, but I think we started to have that in any event. But I think it's remarkable that it's working as well as it is, but I don't think it's sustainable.
Mary Ardos, who runs asset and wealth management for JP Morgan Chase, says she couldn't agree more.
If you ask anyone today, it feels like it is fraying. It is hard. It takes a lot of inner strength and sustainability each and every day to continue to focus and to not have the energy that you get from being around other people.
Barclays boss Jess Staley says it's hard to sustain the company's culture with the majority of workers working remotely.
Over time, I think this working remotely with the majority of one's population, it will increasingly be a challenge to maintain the culture and collaboration that these large financial institutions seek to have and should have.
Erdos says executives believe that part of the initial success of working from home was due to adrenaline from having to adapt so quickly.
And President Biden is pausing new oil and gas leases on federal land. He says he's going to review them. He also cut fossil fuel subsidies as part of his climate change and environmental agenda. Oil companies, though, are very concerned. They say the actions will cost millions of jobs and billions in revenue at a time when the U.S. economy is struggling. Some states that depend on drilling are also concerned. The orders will mostly affect onshore drilling in western states and offshore drilling in the Gulf of Mexico. In total, it'll impact about a quarter of the nation's oil and gas supply. Biden's pick for energy secretary defended the president's push for clean energy on Wednesday. At her confirmation hearing, she says she believes the U.S. should be energy secure, but it should be done in the cleanest way possible. And one senator is demanding that agencies stop their end-of-year spending sprees. What a good idea. Binging on taxpayer money the end of every year. Unbelievable. She says making the agency's budget documents public would help.
Senator Joni Ernst says the federal government ends every fiscal year with a mountain of unspent money. She said the total for last year added up to more than $800 billion. And 2021 is expected to be nearly the same, with all that taxpayer cash sitting idle and for no purpose. And this contributes to wasteful end-of-year spending. She gave 3 examples of use it or lose it spending, asking, why did the EPA pay $1.5 million for unused parking spaces in 2 years? Why were tens of thousands of dollars spent on an underwater sculpture garden? And why was over $600,000 spent in part on a study to figure out if chimpanzees can recognize themselves in a mirror? She says the country has more urgent needs and taxpayers deserve to know what's behind these kinds of spending decisions. But, she says in typical Washington practice, these budget justifications are only available to a select few and not you, the taxpayer, who actually pays the bills. She says that's why she's giving her January 2021 Squeal Award to the Office of Management and Budget for keeping these documents hidden from the public. Ernst is co-sponsoring legislation that would require federal agencies to make their budget requests and justifications public. It's expected to be reintroduced in the 117th Congress.
And a Harvard study says stimulus checks should be more targeted. It says higher income families are more likely to just put their direct payments into savings instead of spending it. So it estimates $200 billion of government spending will only lead to $15 billion of additional consumer spending. So it says the next round of stimulus, if there is one, should target lower income households. And Goya's CEO has been muzzled by his own company's board of directors. He's a vocal Trump supporter who's been criticized for voicing his conservative views. NTD's Christina Kim has the details.
Goya CEO Robert Unanue says Biden's election win is unverified. Speaking on Fox Business on January 20th, he said big government and others are against the working class. Now, Unanue has been officially muzzled by his board of directors. Sources told the New York Post and CNN that last Friday, the Hispanic food company's board of directors voted to censure their CEO, issuing a full stop on his ability to talk to news outlets. This means Unanue can no longer speak to the media without the board's approval. A source reportedly said to CNN that Unanway imperiled the future of the company and endangered the lives of some stakeholders. After being censured, Unanway told the Post he has independently made the decision to stop speaking about politics and religion to lower the temperature. He says while he won't be speaking out on these issues on behalf of the company, he is open to potentially speaking on these issues in a personal capacity. This follows backlash he got in July when he said the U.S. was truly blessed to have Donald Trump as president. Left-wing politicians and celebrities then called people to boycott Goya products, but at the time, Unanway said he wouldn't apologize for his comments, calling the boycott oppression of speech. Christina Kim, NTD News.
And HSBC is in the spotlight for freezing the accounts of a Hong Kong pro-democracy activist. UK politicians accuse the British bank of eroding democracy. NTD's Patrick Hayden has the details.
British lawmakers pressured HSBC's CEO Noel Quinn over aiding Beijing's crackdown on democracy in Hong Kong. The bank recently froze the account of a former Hong Kong lawmaker and pro-democracy activist.
But there must come a point in some societies where it is impossible for a decent business to carry on when the activities of the government there are so evil or wicked. Would you accept that, or are you saying there is no such point in Hong Kong?
I am nowhere near that point in Hong Kong.
American and British shareholders criticised the bank after an Asia executive publicly endorsed Beijing's Hong Kong national security law by signing a petition. When it was implemented last year, many no longer considered Hong Kong a free city. The law includes being able to extradite suspected criminals to mainland China.
You're very careful to say we don't make ethical judgments about anything at all. When I don't know what your definition of a political or indeed ethical judgment is, but somebody coming out in favour of a one-party state's undermining of China's two systems approach seems to me to be a pretty loaded ethical and political statement.
Clearly, if I think about our position in Hong Kong, and I don't want to use the word ethics because particularly that's open to interpretation, but I believe we're doing the right thing for Hong Kong.
Members of Parliament consistently brought up that HSBC regularly comments on ethical topics including Brexit and environmentalism, but when it came to commenting on the crackdown, Quinn avoided taking any stance. HSBC takes about 2/3 of its profits in Hong Kong, so moving out of the city is not an option. Reporting from London, Patrick Hayden, NTD News.
And still to come, a digital marketing expert gives tips on how business owners can stay on top of changing consumer behaviors this year. And tens of millions of Americans pile on more debt since the pandemic started. Millennials seem to be hit the hardest. Find out more after the break.
If you're like me, and I think it's actually most of us, then you're getting really fed up with the nonsense going on inside the banking system. I mean, we've worked hard our entire lives to retire comfortably. We just recovered from the crash of 2008, and it seems like it's about to happen all over again. Look at the too-big-to-fail banks. They're only getting bigger as the Fed hands them trillions of dollars daily, while simple folks like you and me, we're only getting the short end of the stick. That's why I'm glad I found this book called The Bank Failure Survival Guide. Give us a call, and we'll send you a free copy with no obligations whatsoever. Just one American to another, telling you about some options that you might not have considered. Call 866-239-2619 today for your free copy of The Bank Failure Survival Guide. That's 866-239-2619.
CreditCards.com says 51 million people have added more credit card debt since March. Half of U.S. adults with credit card debt say being unemployed now or in the future would have a major effect on whether they could make minimum payments for the next 3 months. Adults aged 24 to 39 seem to be hit the hardest. More than half say their credit card debt is higher since last March. And 55% of millennials blame the increased debt on the pandemic, more than all other generations. And is your business keeping up with the changes in consumer behavior? NTD's Evelyn Lee spoke to a digital marketing expert to find out how to best adapt your marketing strategy this year.
Consumer habits are changing. Is your business changing with them? Teddy Height, founder and CEO of digital marketing agency The Gauge Collective, says the lockdowns resulted in a large consumer jump to digital platforms.
In the United States and across the world, social media became the place for people to communicate.
At the same time, businesses are experiencing a shock to loyalty. A McKinsey study found that over 70% of consumers are now rethinking their go-to brands. So as the pandemic continues, customer retention is becoming a priority. Height says by driving and creating community, businesses can make customers want to come back time and time again.
A lot of our clients actually dove headfirst into virtual events, whether that was via Zoom or via a platform like Facebook, using a live feature there or a live feature on Instagram, and really offer your audience something more than just sales messaging around a certain product.
He says community building starts with authenticity.
Because it's very easy to see the shiny thing in the corner that maybe your competitor's doing that you think might work for you, but it may not be inherently authentic, to who your brand is and what your consumers look to your brand for.
Before looking at other brands, Hyde recommends taking a step back. Really digest and understand who your brand is first, including its values and characteristics.
That's going to allow you to select, key areas that you can really play in.
Sephora, for example, makes their customers feel connected with their online community beauty talk. Users can inspire each other by uploading photos of themselves wearing Sephora products and link to the product page of all the items used, becoming instant brand ambassadors. Lego enthusiasts, on the other hand, get the chance to present their product ideas on the brand's very own platform for fellow Lego fans to vote on. The most popular ones will even go to market. Hyde says one other trend that digital marketers shouldn't miss out on this year is the shift to e-commerce platforms.
There are a lot of great inexpensive platforms that you can use to bring that to life, and then really awesome ways to seamlessly integrate with your social platforms to continue to storytell and to continue to sell your product in engaging ways.
For the future, Hyde expects shoppers to shift to digital even more as online shopping has become a habit during the pandemic. Reporting by Evelyn Lee, NTD News.
Still to come, Walmart has a new strategy to speed up delivery and curbside pickup orders. It involves robots. And a Russian company unveils a new flying taxi. If it gets the green light, flying to work could be just around the corner. More on that after the break.
Is deep-sea fish oil really healthy? Due to pollution in the oceans, most fish contain heavy metal elements and radioactive substances. That's why it's so important to choose a pure source of omega-3. Puritang green vegetable omega-3 is made from purslane and perilla seeds, which are rich in nutrients and minerals, especially vitamins A, D, E, calcium, and iron. With natural processing and no harmful chemical additives, it has more than 90% concentration of omegas 3, 6, 7, and 9. It effectively improves brain power and is beneficial to the heart's health. Puritang omega-3 does not smell of fish and contains no pollutants, so both adults and children can safely and easily consume it over a long period of time. Puritang green vegetable omega-3. Eat 2 a day and you'll feel brand new!
Walmart has a new strategy to speed up delivery and curbside pickup orders. The retailer says it plans to build automated mini warehouses across dozens of states. The fulfillment centers will be located in the back room of stores or next to them. Robots will gather thousands of items instead of employees. Then employees will assemble the orders. Since the pandemic started, Walmart has seen a surge in online sales. The company says these centers will allow them to handle more orders at a faster pace. And what if I told you flying taxis were just around the corner? Well, one Russian company has a new model and might make flying to work a reality in just a couple of years.
A Russian company has unveiled a new model of flying taxi. It can fly 30 minutes on one charge.
At the current level of battery development, we can already talk about 30 minutes of horizontal flight, which in general solves the problem of transporting passengers in a metropolis.
The company will test the aircraft using a 5G network in September, and if things go according to plan, it can go into mass production as early as the end of this year and be ready for flights in 2 to 4 years. The Dubai police tested the company's earlier version, called the hoverbike. According to its CEO, it was a much more extreme model.
We started with the technology of a single-seat personal drone, Hoverbike Scorpion S3. It was extreme. He was noisier, more extreme, bolder, if I may say so. Since then, we have been constantly modernizing the technology of transporting a person by air using a drone.
When this latest model is ready for flights, the company says it'll cost about 43 cents per mile. So a 20-mile flight would cost you less than $10. The company has attracted $3 million of investments for its flying taxis since 2016.
That's the latest business updates for today. You can catch NTD Evening News at 6:30 p.m. Eastern. For NTD Business, that's all for today. Thank you for watching. We'll see you tomorrow.
Hi, we're happy to announce that you can also catch us on cable TV now. Millions of households already choose us as one of their trusted news sources, and you can too. You can watch us in Chicago, Washington, D.C., New York, and many other cities as well. And if your system doesn't carry NTD yet, you can just give them a quick call and request NTD on your cable provider. Thank you for watching. See you next time.